Pam, Pam. Me. Morning, everybody. How you doing, huh? Today is November 7th, 2017. It is a Tuesday, the greatest Tuesday ever. Let me remind you that trading Forex is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, so please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah, let me open the window. I'm hot. Tonight we could be as one tonight. All right. Hi, my name is Wayne. I am the Chief FX Market Strategist for TradersWay.com. We are a boutique foreign exchange brokerage that would like to earn your loyalty and respect this morning. And if we do, please visit TradersWay.com and open a demo account. Test out our spread, test out our execution speed, contact our customer service, and fall in love. Because I know your current broker does not love you like I love you. Because you're my sweet baby. I do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. Where? Forex.Today. Oh, cool. John says, am I TradersWay? No, I am not TradersWay. I am the Chief FX Market Strategist for TradersWay. Ah, yeah. Yes, no, I am not personally a broker. Don't think I'd even want to be, really. So anyways, thank you very much for being here today. I appreciate the effort that you put in to learning. I know it's a difficult thing. It took me blood, sweat, and tears for years, and it's still something I would never call easy. And it is something that I continue to work hard at every single day because I don't want to let you down. So you keep me sharp, and you keep me focused. You want to do some technical analysis today? Cool. Hey, Katie. Yeah. Yeah, okay, cool. So I think you can see all the pretty colors on the charts. I'm cool with that, right? Ready, boy? I thought I did do gold yesterday. I said, look, it's the same as it was before. We've hit support. We haven't broken support. Maybe it'll go up, and if it goes up, USD would come down. How does that smell, Freddie boy? Nothing's changed. If we were lower than this area, then a lot would have changed. But we have an inside week. So I do remember talking about this. We had an inside week. Hey there, Freddie boy. And how do you do to you? Oh, Barney. Well, yeah. Hey, Debiso, we were talking about how the Bhutanese talk bad about the Nepalese. He says, you want to party, you want to go to massage parlors, you go to Nepal, but you don't come to Bhutan. I'm like, oh, snap. Bhutan talking bad about the Nepalese. Yeah, who said that? I'm watching a documentary at Harvard because I'm studying ecotourism, you know, because I'm working toward my Nobel Prize. Anyways, And they were talking about how Bhutan has a very different tourism policy. They charge $250 a day for a visa. And he says the only people that come here are millionaires, retired university professors, and other people that really, really care about our culture and our environment. And everyone else is looking for brothels, for bars, massage parlors, for parties. They go to Nepal. I'm like, really? But I guess from a Bhutanese point of view, right? But yeah, but just like, do people really go to Nepal to party? They're like, oh, Thailand, that is so 90s. You want the real full moon party? You go to Kathmandu. All right, man. Let's go to Nepal, man. All right. Yeah. Yeah, I guess though. I guess that's just not my culture. Maybe that. So I never put these things together. I'm a simple boy from Saskatchewan. It's funny. So I smoke cigars, not weed. That should be a T-shirt. Alan says, Wayne, your training is one of a kind. Oh, well, thank you, Alan. Includes fundamental as well as technical analysis, overall trading and investing insight, philosophy in a perfect mix. Thanks. I greatly appreciate your efforts. Well, I thank you for the positive feedback. I really do. So, all right. So, going back to Fred's question, I don't have the right. Oh, John says, how come I never do COT anymore? I guess put it this way: I don't think I did COT for many years, and then we got into a trough in the U.S. economy. Okay, John, where I was trying to discern whether the worst is over, and I got to that point, so I'm done. Like I don't need to know anymore. I got other things, right? It's just where's the turning point, because that's where commitment to traders reports are most important when you're at extremes. Oh, all right. I'll do it if you want. Okay, you have to ask me on a Monday, but I'm happy to. I'm not avoiding it. I don't think I am. Yeah, okay. Thank you for logging in, by the way, to get that question in. I appreciate it because I know you have to get back to the dance floor. Yeah, well, it's hard to be an exotic dancer and trading, but you can multitask, Anthony. Yeah. So, the question here is, Bloomberg has reported to Anthony. By the way, where do you carry that mouse? That wireless mouse? Oh, hang on. Yeah. Anyway, Bloomberg has reported that there's no room for traders anymore. That it's all algorithms, and everything is going to be computer based. I believe that's extremely overplayed, I suppose. There's no doubt that artificial intelligence of some sort, basically machines, are important, but they're not necessarily the trading. Now, okay, maybe there are lots and lots of like high frequency traders will need the machine to do the trade because it's so fast and so furious. But by and large, you can imagine a hedge fund, and it's trying to figure out what strategies to run. And what they're really using the algorithms for is to figure out what kind of market they're in. So imagine a room filled with 100 machines, or maybe just one supercomputer, whatever, and it's testing 100 different strategies. And what they're really looking for is which ones are working now. Okay? Think of it that way. And they can say to their trading desk or trading floor or traders, hey, we're in such and such a market, so this is how you would treat it. So like maybe a bearish aggressive market or something like that. I don't know. It's way oversimplified. But on the other end of that, the computers are only as good as the code, and the code is only as good as the trader telling the programmer what, the strategy, right? Like the code itself is only good as the trader. So Anthony was wondering, like, is this a career that is dead? Are traders dead? And I don't think so. Another way of looking at it is, what is the vast majority of traders, let's say professional traders in the United States? By trader, I don't mean like some wealth manager at some stupid firm. I mean like a trader, hedge fund. What is by far the most common type of hedge fund? What is it that they do? Well, not hedge for sure, Paul. Long short equities. So when you look at types of hedge funds, right? Well, you can't just say equities. So when you look at hedge funds, they're in all different types of categories. So you could be long only, you could be short only, you could be long short, you could be beta neutral, market neutral. There's all different, okay? But by far in today's world, long short equities. Now, go back to like the mid 80s. Do you remember when the movie Wall Street came out? Right? Arbitrage, merger arbitrage, that kind of thing was extremely big. It's not so big now, but it was extremely big back in the day. Okay, now DeBeesta says Renaissance Technologies trading is with a third of its labors are PhDs. Okay, let me comment on that. They're a high frequency fund. That's my point. A high frequency trader, a HFT, right, is not common. Okay, this goes back to what is common. The most common strategy that a hedge fund employs is long short equities. They're stock pickers. They're not necessarily pure algo plays, right? And then after that, there's a combination of, long and short, not, all that kind of stuff. But, I don't know. I guess, how do I answer this briefly? No, I don't think it's the end of trading or being a trader. I think it's a heck of a way to sell newspapers. right? Yeah, Ackerman's, yeah, which he's no longer short, I believe. But, that would be, most of those funds. So he's an activist and all that kind of stuff as well. I mean, those are all different strategies. But to think that most firms on Wall Street are just running a computer in a closet and they're spending the rest of their days cruising around the Caribbean, living a lavish lifestyle in their $100 million yachts, and it's just printing money 24 hours a day. That's a hell of a story. People love reading that. Okay. Ryan says, algorithm or not, prices are still going to be bought. So yeah, but the thing is, what I'm trying to suggest is most of the algos, I believe, are being used to either filter the market to determine conditions and such, or they're using it just to do the tedious work. Like for example, you dropping an order into the market. Okay. Well, I did that, but what if a machine did that? Okay, that's fine too, right? But are they truly making decisions? So Elias says you need to watch Billings. So they're true stock pickers, right? Essentially. Trading rumor mills and stuff. But it's not a fund of machines and three nerds driving Lamborghinis, right? It's a whole core of portfolio managers and analysts, right? That would be more typical. So their job is to scour through information, look for what people miss, and buy. And it's not necessarily just buy cheap or something like that. They're trying to find inside information, like using satellite data to track how many trucks are in the parking lot of a firm, and find that kind of stuff. But it's humans first, with a bunch of computers and a bunch of human analysts and a bunch of other things. So I don't know. I guess that's my long-winded answer. Is there a job for traders in the future? Yeah. If you're talking about banks now, not funds, I mean, funds are obviously using algos. I mean, there's no doubt about it, but they're not necessarily replacing traders. Like, hey, man, I fired 5 profitable traders because I'm going to have one machine do their job for them, and even better. No, probably not. But do we need as many bank tellers as we used to? No. Do we even need any bank branches anymore? Or do we just need ATMs? Right? I'm still shocked when I see someone at the grocery store write a check. I'm like, what the hell is that? I don't even carry cash. My wallet's full of cash, but not from this country. And strangely enough, I don't have my wallet. It's upstairs. Wow, that's really weird thinking. But anyways, so think of all the middle office and back office activities at banks and other financial institutions on Wall Street that will be fizzled out over the next 20 years because of technology. Yeah, I agree with that. Will there be efficiencies gained by using computers in trading and trading firms? Yeah, but again, probably middle and back office stuff, compliance stuff, portfolio management stuff, risk management stuff. Yeah. Will computers be great for analyzing with their fuzzy logic market conditions and stuff? Yeah. Would you dump all your money onto an EA? No. Right? So, no, I don't, no, not yet, not now, maybe never. Well, Citadel is different. So maybe you guys don't understand high frequency trading. Okay? So, for example, there are 2 different things that you can measure, right? So let's say a block order a block order comes from a big institutional trader somewhere, or a bank. Bank says, okay, we're going to buy 100,000 shares of Apple because we've accumulated a bunch of buys from our clients or something, right? So anyways, the order goes in and goes into an exchange, and the exchange says, well, we only have 22,000 shares available, so we'll partially fill that order, and we'll send the order on to the next exchange. Citadel says, oh, look, somebody's buying over here at BATS, and now it's going to go over to this other exchange, so we will then buy it at the exchange and then sell it to those new buyers when they come in, but they'll do it in a millionth, or actually a thousandth millionth of a second. That's different. They're not picking stocks. They don't give two hoots about what stock it is. Not interested. The thing is, they know you're buying. They know you're buying, so they buy it 100 millionth of a second before you buy it. So they buy it and they sell it to you because they already know it's coming. They already know that you will buy it. So they buy it before you and then sell it to you. And literally, right, 1,000 times faster than you can blink your eye. They've already done it. They've already bought and filled the order to you and made money. That's different. That's not picking the stock. That's not doing research. That's not filtering through 5,000 companies and buying something that's undervalued. All right? So don't mix all this stuff up, guys. It sounds like you're not quite there yet. Right? There's differences. Okay? So HFT is different. Let's go. So I'm not saying algo is not important. That would be silly of me. But the idea that it's machines only, or we're moving toward machines only, not now, maybe someday. But then you're going to get like to the point where you're basically like indexing now, right? So why pay a hedge fund manager $220 when you can buy the S&P 500 and pay 0.00125? When everyone will be indexed and volatility will drop. Oh wait, that's like now, right? So anyways, let's move on. Cool. Like I said, John, ask me on Monday. I'm happy to do it. Okay? You're the boss, John. Totally. When people ask, I try to deliver because I'm here to deliver to you, like, that kind of stuff. Anyways. All right. So anyways, gold hasn't fallen, so it's sideways to up. It's what I call a J-Lo. I stole that from Rob Helene. That's Rob Helene's joke. But it's pretty funny. And that's a J-Lo, a big wide bottom. Doesn't make sense anymore because she's like a grandma. But it was pretty funny 10 years ago. Okay. Here's our CAD. Again, we had this topping out, making a lower low, then making a lower high, then making a lower low, and then, after a lower low, you would expect another lower high. We have the top of the range up in here. Remember, the range was a guess. I drew it before we made this low and before we made the high, because you can see it doesn't touch the high. It touches the guessed high. So in this uptrend, this is what I surmised. It's not too bad, right? It's not bad. It's pretty good surmising. I surmise it's pretty good. There we go. So maybe I'll adjust here and see what happens. Okay. Play it like that or play it like that. So that says maybe up to the, let's say probably up to the weekly pivot point, maybe as high as weekly M3. So I'm going to adjust it to try to get that weekly M3 in there. And then down. Plausible, right? Roll reversal of the double top, sure. On a higher time frame, I guess this is a pretty high time frame. Like what I was thinking is this uptrend was so hardcore. Don't be shocked if it comes all the way up, double tops this top, double top of a double top, and then drop. And then that would be long-term Canadian strength, longer-term US dollar weakness. Okay. Yeah, let's cover that. Yeah, pretty obvious stuff in here. You're a bull, right? And then I think I have this in here as well. So we'll see if it climbs back above that. This says it can fall further. Okay, but whatever. Okay. My spidey senses are tingling and they say this could fall around here. How funny, huh? Isn't that funny? But the fact that like all the crazy news over the weekend and stuff, and this heads up and hits the projected monthly target, conservative projected monthly target, and a stop. I would call that a stop. That is now almost 24 hours after, you know, up, 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 up. Stop! Now, sure, it could still go up and then come back around, but at least this is where you start talking top, right? You don't have to say things like, I feel like it's come to an end. Well, we've hit our conservative monthly target, and this is where a trader should probably become more conservative. That's what you'd say on TV, right? Our analysis shows that the market has become toppish after this bullish rally, and we're advising our clients maybe to book some profit. Take some risk off the table. It'd be prudent. Right? All those kinds of things, right? Any thoughts, questions, concerns, comments? Right, so I believe that has a lot to do with the USD on top of it, right? Not just pure play oil correlation, because remember, oil and Canadian dollar are not 100%. They're not 1, and they're not -1. So there's more to it than just oil, for example. You know, you could nickel, gold, wheat, so on and so forth, right? Mike wants to know what's going on in Saudi Arabia. Well, obviously, I'm not a Saudi prince, but it seems to me that maybe there was some debate on how to handle OPEC. Remember, we said OPEC's in crisis. You guys remember all this? I said OPEC's in crisis because Saudi Arabia is no longer a swing state, and that the thing could collapse. So I think what we're seeing is there's some vulnerability there. So anyway, so you get the leadership in charge, and they start discussing things with their people, and there's some debate on what to do. Now there's less debate. Lebanon. Yeah. So Debisa brings it up. It's a power play. Of course it's a power play. Okay. So, yeah. So, see, we had a big up and then it came down. Then we had a big up, then it came down. We had a big up, it came down. We've just finished a big up. Seems like a reasonable place to start it down. You can go a little higher and then come down. But above 56, you know, I'm looking at resistance. But try not to get in the way. Like, I don't mean short there. I mean, you should be taking profit there. Okay? Right? I don't mean short there. I mean, look for profit taking there. There might be a retracement, but always remind yourself that the better trading on the long run is trading with the trend. I bet you if I looked at many of your trades, they're counter trend. Probably because you're late and stuff, right? But it's a funny thing. I mean, maybe you even haven't looked at your trading. You should look at your trading, right? And double check to make sure you're not like picking up 25 pips on you know, like literally people will sell here, pick up their 25 to 50 pips and they're happy. All they had to do though is buy down here when we're calling support and let it run 3, 4, 500 pips. But contrarian by nature, yeah, there's something about that, right? Like it can't go up any higher. Yeah, is it, Ryan brings up, you know, is this a supply issue or a demand issue? I think demand is picking up globally. So when I called out 45 being the new bottom and that's it, well, we're not going to go lower than that, maybe in a lifetime. That would I think I did a big discussion about shifting the demand curve, right? And over time, the supply curve should shift as well. Let's D1, S1, right? Quantity 1, price 1. Okay. The global economy is improving for oil. Okay. What curve do I shift if macroeconomically the global economy is starting to improve? Okay. Do I shift the demand curve to the left or to the right? Okay. So I'll denote this in red. D2. Okay. In this case, quantity demanded will increase from Q1 to Q2. And price will rise. Okay. Now, you can only produce so much, and we're already producing at 100%. Well, it depends on the slope of your curve, right, John? Right? You got perfectly inelastic. Oops. You got perfectly inelastic, and you got perfectly elastic. Okay. The world is already producing at 100%, and demand increases. The quantity of oil demanded is increased, but they're already producing at 100%. So you start drawing down your supplies, right? You understand that part? Oil supplies have been pushing oil prices down, right? You understand? Oil prices in the last few years, the quantity of oil in supply has far exceeded demand, so prices got really, really low. So now the global economy is improving, demand is increasing, but supply was already at 100%. So if they can't produce more, we start consuming from what's already in supply. Does the supply curve shift to the right or to the left? Anybody else? Yeah. How about a question mark if you don't know? Okay. It shifts to the left. Left is less. You know what? Can I back that up? Shoot. I should have done it here. I wonder if I can. And then even less. So we're drawing it down over the time. All right, so let's do it over here. We'll call this S asterisk. All right. So now it's a supply curve. Supply now, the quantity supplied has gone this way. Okay, price now is way up here. Demand is high. Okay, the new equilibrium is here. Price is high, less quantity is offered. Okay, and then here is the drawdown. The quantity demanded versus the quantity supplied. There's less supplied than demanded, so we're drawing down inventories, and prices rise. So that's what we were talking about back at $45 a barrel. The demand was going to improve. Demand curve shifts to the right. And over time, we'll start drawing down supplies. Supply goes to the left. And the equilibrium shifts first to here and then to here. Because we're like, we have way too much oil, right? So the way of looking at it is the other way that we're drawing down is OPEC is trying to cut back production at a time when demand is increasing. You see? So what happens is price goes from P1 to P2 to P star, and we're drawing down these inventories. You know, first a little, then a little more, and then a little more. So using a simple chart, we can figure out that there will be a drawdown in inventories and an increase in price. But I did something like this back at $45 a barrel. Actually, we're at 50, and I said we'd come back down to 45, right? It had rallied up to 50. I said come back to 45, create a new bottom, and then rally up to 55, right? And I did something like that around there to explain why I thought that. Interesting, isn't it? Now, the elasticity that was brought up is a micro question, not a macro. Okay, well, what will happen is if demand is high and supply is low and falling, okay, what happens is supply keeps moving to the left, So let's say now oil has gone from 50 to 75 to 100 to 125. Okay, at $50 a barrel, okay, we were demanding Q1. At $125 a barrel, oops, at $125 a barrel, all right, we're going to demand a lot less. Okay, and what will happen is most likely we're shifting down, or okay, we're shifting across the demand curve, but we're not shifting the curve. It's just like, hey, because what will happen is at $50 a barrel, we're offered this demand, right? And then something happens global macroeconomically, things improve globally, and so demand will increase, right? The quantity in here, whatever, the demand will increase, but if price goes too high, then it'll shift back this way, and there'll be a shortage, right? So for example, you would love, if you were an oil producer, if you were Saudi Arabia, you would love to sell your oil at $125 a barrel. Just in this world, no one would pay for it. But you'd be happy to do it, just People don't want to pay 125, right? But if you sold it at $25 a barrel, you wouldn't be happy, but you'd probably get a lot of people lining up to buy it. Right. So that's why they're right. So if you're talking about demand being constant, and the only thing impacting the sale of oil is the price, then that's a shift in up and down the demand curve. So you're like, well, at 25, I'll buy a whole bunch, put it in storage. At 50 is a fair price, and at 75, I don't want any. Okay, well, that's your demand curve at different prices. Okay? But if you're a factory and all of a sudden you double your orders, you're like, man, I'm going to need some more energy. And that's that. Well, that would be a shift in the entire demand curve, because you're still going to want more at 50 and 60, right? Because you're booming. There's actually a change in demand, not just the quantity you demand at a certain price. Yeah. Right. How do you guys get me into this stuff? What you want to do, this is the sell zone, right? Remember, going back to last week, I think this was Thursday that I did this, maybe Friday. But if you see this X, this means a possible sell zone if you're a bear, right? Pretty mediocre though, because we're stuck in the middle of a range, but I drew this to explain if you believe we're making lower lows, you should be looking for a lower high. Where would the lower high be? And there's a pivot cluster here, and blah, 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 blah. Okay. Notice how this moved from a fib level to a fib target. Thank you, non-farm payrolls. Okay. So it's one of these situations where if you're actually a bear, this is pretty obvious. If you're looking at this to make decisions, whether you're a bull or a bear, it's not obvious at all. Okay? You understand? Like, that's what's holding you back. I don't think there really is anywhere else to sell this than this region here if you're a bear, right? Like, it's pretty straightforward. If it's going to fall, it's going to fall here, maybe way up here, but you're not planning that today, right? Of course, it won't let me grab that. You know what I mean? So it's like you sell here, or maybe a double top. We'll see, right? So to me, there's no conflict. So I guess we'll do a 1 hour on this. Okay. So we have to go back 2 weeks. And I believe I planned a bounce here, a bounce into this area. You can see it's still here. Let's call that 117. And then from 117, looks like it was even last month. So I had it coming down to last month's target. And this month here wasn't that great, so it's pulled up a little bit, but it's the same idea, right? Can you see how we have it coming up to this point here, and then down to, well, here now, right? Do you think that's still the plan? Up to the roll reversal and then down to the target? You can see I have it here as resistance, here as resistance, there it's resistance. Right? John's upset because it didn't hit 17. It hit 1690. So we have dollar weakness here, and dollar weakness here. Or did I just say weakness? Hang on. I was thinking about showing you this index. Of course, it's not weakness. Anyway. Let's go back here. Dollar strength here, dollar strength here, dollar strength here. There we go. So going back to the index. Okay. So going back to the peso, I noticed somebody asked me about it, was it yesterday? But this here, right, is the last day of the month. October 31st, that is my date of birth. I got to the party and I did the Smurf. I get it. I got it. I know it's good. My rhymes are tight. You wish you could. Right? This is the last day of the month. Okay? This is the first of the month. This is the second of the month. I'd call this, supportive. Right? This is the first of the month. This is the second. No, this is the 31st. This is the first. This is the first Friday. So how do we feel about that? Yeah, like, but the thing is, we knew it was probably going to be short term, didn't we? We knew it was kind of a mediocre setup. The 31st is in the middle of the week. US dollar's been strong anyways, right? Like, it's kind of hard to short this. So somebody set up in here, and I'm like, nah. Somebody set up in here, and I'm like, it's too early. It did fall here, and it did fall here. What's the difference between going on the last day of the month? What's the difference? Money flow, yeah, but the answer I'm looking for is predictability. Okay? Could you have reasonable amount of success by trading this with your eyes closed? Could you predict this with your eyes closed? You don't even need to see a chart. You know, I don't even care. I don't need to see a chart. I know. I just know. What about this one on the 31st? Yeah, that is the one we talked about like a week or two in advance. The end of the month. Payday. I don't even care what price is it. I don't care. So if it's an uptrend, it might, or let's say probably, will fall for a day or two. But if it's already a downtrend, it might fall for a week or two. I think you can all agree that that's what we've said all these years. So I can do this shot with my eyes closed. Doesn't mean I'll make money every time, but I know exactly what I'm going to do, and I know when I'm going to do it. I don't know what the price, though. But to me, the price is irrelevant. Okay, what about now? I don't know anything about now. I don't have a technical trade. So, yeah, I don't know. I guess you could say, well, it's topish, right? And maybe you're calling this a lower low, which would predict a lower high, and you feel like you got that, and great. Fantastic. Good luck. It's never been a technical trade for me. The day Artem. Artem, have you watched the video I made like 3 years ago on how to trade the Mexican peso and why it works? There you go. Nice. Has anybody not seen the video? And you still don't get why that one's predictable and this one's not. Okay, how about this? Will someone volunteer to find it on YouTube and then post it on Forex.Today? That'd be sweet. Bravo, 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 bravissimo. Right? Shake it away, shake it away, shake it away, shake. Shake it away, shake it away, shake it away, shake. Toot away, pop, pop, toot away, pop. That's for you, Ryan. Yeah. Does anyone know what language that was? Toot away, papa. I think it has something to do with bathing, showering. Shake the water away. Yeah. Which means by the time I learned about it, somebody told me it was South African. You're like, South African? That sounds like Fijian. Yeah, African. They're like, wait, dude, Fiji's not in Africa. But who cares? It's not in America, so who cares? Yeah. Right? Hey, man, I'm going vacation in Bali. Oh, I hate Africa. Like, wait, dude. Bali's not in Africa. Hate it anyways. It's not in America. All right. Yeah, how about this one? So how's it going? Let's zoom in here. Beep, 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 beep. So 24 hours later, after buying it, I'm break even. Nice. That's some good trading right there, boy. Nice. 24 hours, nothing to show for it. Sweet. Yep. Yup. But do you see the trade plan? It's not unreasonable, right? It's not great. I have another one down here to buy. Pick up a little bounce at the monthly M2 bottom. Rather not have to do that. Yeah. So I just got to sit on it. Could be worse. This is going nowhere fast, huh? Which is perfect if you're doing a carry trade. You want low vol as a carry trader. Look at this going back. Amazing. So when you're a carry trader, you really do want low volatility. Was my Aussie yen different? All right. Can't do it. now. I don't think I can mute that app either. Too bad. Now that is a billionaire, by the way, and I skipped his phone call for you. Okay. Kiwi Swissy. This was a carry trade I tried to catch last year, I think. I think the year before then, wasn't it? I guess in here. Too bad. I don't know why I got knocked out looking at this, but I guess these are weekly, so anything could happen. Probably this. Okay, but imagine sitting on this for this amount of time. Hard to buy any of this. Like this isn't, you don't wait for it to make a lower low and then buy it, but I guess you're playing it off of here, right? Seems like it could fall another week or so, and then maybe it's a buy. Got some thinking to do, huh? Pound Swissy, nice one to trade. Looks like I already have this set up for you 2 weeks ago. Roll reversal, higher high, higher low. Do you guys remember doing this one? I remember bringing it up. I don't remember the specifics. I remember doing it though. No? Nobody remembers? No? What's going on? No one's, oh yeah, somebody's typing. No, huh? So how do I interpret that? Is it just something that you liked, you didn't? I'm assuming nobody did it. But why the whole room go quiet? Right? You can see the roll reversal. It's right here. You can see the projection. So I only pointed out that we were back on support. And then I projected just the double top. Do you feel like that's tradable? By the way, really, when these vertical lines, you're supposed to have them on the re-entry to the trade zone, which is that. Come on, guys. Why did 70 people just go quiet? Oh, Brooke's having an internet problem. All right. Anybody else? Is it too obvious? Is it not obvious? Are you happy, sad, or glad? Oh, come on, talk to me, Goose. Okay. Notice how this week opened high, which means you're supposed to use the moving averages. And then looks like on Tuesday hit the target, right? Looks like late Tuesday, early Wednesday. Hit the projected target for the week, which tells you if it's happening on a Tuesday, certainly Tuesday, not necessarily Wednesday, but certainly Tuesday, that you should look for price to come all the way back to the central pivot. Does anybody agree with that? That that's the one of the two counter trend trades? Imagine not knowing that. Isn't it nice that someone has taught you that? 55 hours, huh? Yeah. I mean, it's nice, right? That you don't have to waste 3 years or 4 years or maybe never even notice. Yeah, I forgot about that rule. So it's the first 55 hours or something, right? If you hit the target in the first 55 hours, it's likely to return back to the central. Something like that. So. Yeah, that's an interesting point, Ryan, right? How do you get through, or just imagine going through the first years of trading having no one to show you anything. Like literally, I'd never seen a moving average before. That's where I started. I just stumbled across moving averages, and I'm like, what do these things do? And I'm like, oh, they're averages. What's an exponential average? Oh, it's forward weighted. How would one use these things? Oh, look, price seems to bounce at some of these and not the other ones. So on and so forth, right? So anyways, it's cool. All right. So anyways, interesting stuff. Very good. Did a lot of these already. Maybe we should just pull the plug till tomorrow, huh? What platform did you have to upload trade plans when you first started? What do you mean upload trade plans? Oh, yeah. Bought in some scam trading, paid a lot of money. Oh no. Yeah. So I used to, so my first trading platform didn't have charts. But there was a page like this. Oops. That had more detail than bid ask and high low. But it had like bid ask, high low, close. Then there was some like volatility numbers of some sort. Right? So that literally this is what my first chart trading platform looked like. Oh, it won't even let. There we go. It looked like that. Hey, look, you can be a currency trader. And I had a bunch of data, and one of them had to do with volatility, and I couldn't even tell you like volatility defined by what and by what time frame and stuff, but there was just numbers there. So I'd look at volatility as indicative of what is moving recently. And the way that it would show it was positive or negative, depending on which way the currency pair moved. And I noticed, if euro dollar went down, USD yen went up, generally the same amount of times or whatever, right? Didn't understand that was correlation. I had to figure that out over time. So I started looking at the vol stuff, and I did calculations, and I entered them into a spreadsheet manually, and that would, after about a half an hour of entering the data, it would graphically show me, based on greens and reds and stuff, the most volatile positive, most volatile negative, right? A rate of change, something, but who knows? I mean, I don't know. It just was on my platform. So anyway, so I popped that into my spreadsheet, and it came out. I would do a relative strength exercise. So I organized all the currency pairs from weakest to strongest, so left to right, based on the data I had in the morning, and found the most expensive, or the most strong pair, the most upward moving pairs versus the most downward moving pairs in that period. Then I would have to do analysis on spread, because like pound dollar was 7 pips, pound yen was like 14 pips, all that kind of stuff. Like trading was more expensive. And so I'd have to do calculations based on, the cost, because it was expensive, right? So anyway, so I would kill some things, right? Oh, I know what the spreadsheet was for. I put in all the data because it was based on pairs, and from that I could extrapolate which currency was generally the strongest and moving, right? And generally the weakest and moving. Organize the currencies left to right, strongest, weakest. So maybe Aussie was the weakest and yen was the strongest. So then I knew I wanted to be selling Aussie yen. And then I would look at the cost and say, well, I could sell Aussie yen for 18 pips, but I could sell Aussie dollar for 8 pips and get generally the same move. So in that case, I want to do Aussie dollar because dollar is the second strongest. Aussie is the weakest, but the strongest is Aussie yen, or is yen. Second strongest is Aussie dollar. So they're about the same, but it's going to be almost half the cost, so I would take that one. You see what I mean? So then I'd get that down to a different thing. So I'd pick my pairs after cost analysis, right? Relative strength, then I'd do cost analysis. And from that, then I would then decide, okay, I want to sell Aussie dollar. Then I would go to my chart platform and I'd open up a chart. What would I look for if I was now looking for to sell Aussie dollar? I want to find resistance, yeah. Over bought oscillators. I want to start looking for 5/8 crosses down. But see, I didn't go to my chart for answers. I keep telling you that every day. I don't go to my chart for answers. I have the answers. But I know you agree and then you don't do it. That's the problem, right? So when are you going to figure that out? It'll just be an epiphany one day. I don't know what makes it happen. It happens for everybody at different reasons. You'll just wake up and you're like, oh, the answer's within me. I'm like Neo. And Forex is like the Matrix, right? But amateur traders will scour and scrounge through their charts looking for opportunities to pull the trigger, and they will find them. And very often they make no sense whatsoever. So, okay. So, peace on earth. May the pips be with you. May your profits be above average. Namaste. And I will see you tomorrow. Thank you for being a client to TradersWay. Huh? We appreciate you. And we want you to succeed.